big deal is deal or no deal. Hi, Dean Jenkins with Follow Me Trades, and this is the market update for the week coming up of February 11th, 2019. Let me do a quick review of the big deals to watch for, or the lack of deals. All right, so here's what we got to watch for this week coming up. Again, like I said, the big deal is deal or no deal, and that's on two fronts. First, is there going to be a deal on government funding? There's a deadline this coming Friday of the 15th. And, you see reports that, maybe they're reaching some compromise, maybe not. People taking positions. Don't know. So breaking news on that's probably going to have an effect on the market for sure. And then, of course, the other deal that's pending a couple weeks out from that is China trade. And, the latest headline are we're sending some reps over to China, but President Trump has no plans to talk to President Xi before then. So what does that all mean? We'll just have to wait and see how it plays out. So those are the big deals: government funding, China trade. Government reports coming up. There's really no major economic reports. There's a handful of minor ones. Nothing that looks like it's going to move the market. We are halfway through the earnings season, just over half. And we got some big names and some important companies coming out Monday. Aurora Cannabis. So the sector has been pretty hot, pulled back a little bit. We'll see what Aurora does for things. And we've got Diamond Offshore Drilling. So energy has been an important sector. We're going to take a look at that in a minute. Tuesday, Activision, Under Armour, Twilio, Groupon. Wednesday, Cisco, Yelp, and TEVA, Big Pharma. And NVIDIA, Applied Materials, Baidu, and Coke. So these, these are by no means all the companies reporting, but they're really representative of key sectors. Finally, on Friday, Pepsi, John Deere, and Newell. So these are ones I'll be watching along with others, and we'll see how things play out. To get a report card on earnings season so far, probably the best, most objective source I found is FactSet. Let me show you what they're saying. So here's their latest report, and you got to be a little nerdy. It's a little bit dense, but there's some important information here. So 66% of the companies in S&P have reported for Q4, and the percent of companies reporting above estimates is 71, and that's equal to the 5-year average. So that just flattened out. Last week it was below. But the amount there above is below the 5-year average. Revenues are the companies reporting above revenue estimates are above the 5-year average, but pretty weak. They're coming in 1.2 above the estimates. So here's the headline here that I wanted to point out to you, right? So the earnings growth rate has been adjusted for both the companies that have reported and have not, is estimated to be 13.3. That's revised up from 12%. And if that's the actual growth rate, it will mark the first time that it has not grown over 20% since Q4 of 2017. So what this points to, all that, mumbo jumbo, really points to the potential for some slowing in earnings growth, slowing in revenue growth. And also we have reports, Europe is experiencing some growth slowdown. Europe it's reported has started off 2019 with their weakest growth rate since 2013, and we've seen reports of slowing industrial output in China. So these all add up to, all the economies look fairly strong, but things are slowing down, not growing at the same rate they were. Let's drill into the sectors for last week. So this is a much shorter term time frame, but this is a great, kind of graph of last week, what sectors did well, which ones did not. And, one thing that jumps out is energy last week kind of got hammered down 3.01%, and technology and utilities were the leaders. And outside of that, it's a very mixed picture. So this is all fundamental data. It's all in the background. Ultimately, as you know, I retreat to the reality of charts, but I definitely want to pay attention to what's going on in the background. So on the chart, S&P 500, I've been talking about this. We had this big move from October down to about Christmas, and then all this year, this pretty much linear straight move up. And this week we hit the 200-day moving average, the key level we've been watching, and reversed sharply off of it. Took a couple days down, opened down on Friday, and then rallied later in the day. But this looks, if this reversal holds, this, could be where things stall. And even if it moves up a little bit, if it stays under the 200, doesn't put in a new high, and then reverses again, we could see the trend change. We see momentum bleeding off. You can see the curve here. So my bias is toward the downside here. If it goes up, breaks through the 200, man, I'll go long. I'll take it. But my bias is to the downside here. I'm watching for that very closely. So that's the update. Those are things to watch for. Deal or no deal on government funding, China trade, and then earnings. See how they continue to play out there. As always, please give me your feedback. Love to hear your questions, your comments, whether you agree or disagree. And other than that, I will be providing an update if anything major changes or next week at the minimum. Trade safe, keep your winners big, your losers small, and we'll catch you on the next one. Bye.